All right, so let's just go through our conversation here that we just started. Bank of England not raising interest rates, that's fine. Some people thought that there was going to be a hawkish tone, like they're going to raise any moment, sort of like the nonsense that they're having here in the United States, right? So, oh wow, the Bank of England's imminent on raising interest rates. All right, well, couple of problems with that theory. One, no one ever said that that was going to happen. Two, they don't really have the data yet. Three, you kind of need a trend in rising rates or inflation levels. And four, the Fed's going to go first. So what does this all mean in reality? And why is the market so confused? I don't know why it's confused, but the Fed's going to raise in December. So Carney can't go now. He can't raise interest rates at the Bank of England now because, well, A, they're not ready, and B, the Fed is. So that's that. So the Fed's going to raise in the December meeting. That means the next meeting for Bank of England is like, what, the third or fourth week of January? Is the Bank of England going to raise interest rates then, the meeting after the Fed? No. Again, because now we're talking about ego. If that happened, it would look like Carney at the Bank of England is taking orders from Yellen. Well, nobody wants that. Plus, there's still the fact, like even then, in January, the sort of the January and further GDP will improve. They'll have the inflation they need in January or February, but really a central banker should see at least a trend, even a couple of GDP numbers coming out at target level, and then they'll raise interest rates. So that will likely happen. Let's say they raise interest rates more like June, because you need not just one GDP number, but two. Now, why are they suddenly? Why are they not hitting their inflation rate target or their growth rate targets now? And why would they hit them in January? The answer to that is they have a negative GDP in their number right now, right? Because if you look at how they calculate their inflation levels, they still have a negative number from like a year ago. And so moving into January or the first quarter of next year, they'll drop that old negative number and add the new positive number, and boom. Inflation target, permission to proceed with raising of rates. Do you see what I mean? Like, wouldn't that make sense? They raise rates after they've hit their target. Why would they raise rates when they're not hitting their target? They can't hit their target. They drop that negative number in the financial engineering of the whole process. So really, we're looking at June of 2016 for the Bank of England, which is way ahead of everybody else. We know the ECB will still be knee deep in quantitative easing. I mean, so that's good. But what were they expecting today? Like that there was going to be this huge debate about raising interest rates soon? Well, let's see. These guys have PhDs and stuff, right? So let's see if we can stump them with a question they just can't possibly answer. And the question would be, why? Why would you raise interest rates soon? Lay it out, man. Overwhelm me with your evidence that this is required and needed. Well, I don't think you'd come up with anything. So anyways, whoa, the market's disappointed. What was the market thinking? Well, they read in the Wall Street Journal, or they watched CNBC, and the analysts on CNBC said it was imminent. Yeah, well, stop watching the news. I mean, look, what would happen to a CNBC type thing where they need viewers to watch? What would happen if they said, "Oh, there's no chance in hell they're going to raise interest rates. There's just no way. We don't even want to discuss it until next year." Well, who would watch? They're like, "Oh, nothing's going on today. And the meeting's not going to be that important." Well, that would be the end of them. So I don't know. Well, the one interesting thing is they did release the meeting minutes and the announcement and stuff, right? Which is pretty cool. So hey, we'll roll through the day. Let's do our charts. Let's look for setups. While we're doing this session, Carney will be doing a press conference. So I'll probably stay away from the pound. I don't think we should sit here and just listen to the press conference. In my opinion, I got it all figured out. Right? So what's he going to say that I don't already know? So so that's that. So we'll just do some technical analysis. We'll keep our eye on the pound to see if it flip-flops like a fish out of water. Oh, Kenny's like, yeah, 120 pip move. Oh, yeah, okay, that's fine. But then what? Now what do you want to do? You want, right? It's just, that'd be great if you were short. Congratulations. But now what do you want to do? You want to keep trading that dead thing? That, I don't know. Right? So I think all right, so the one thing that we need to do now is just go to our next level of support. Okay. Cool. So I suggest we stick to the technicals. We'll let the fundamentals play out. We got tomorrow at fxstreet.com during my 3-hour webinar. I'm sure we'll have plenty of time to chit-chat about what Carney said. But they've given the number. They've given their statement. They've given the meeting minutes. I get it. So I suggest we move on.com. If you want to skip scalp that, be my guest. We'll go through all the other charts and get set up for, let's say, making money on the long term. So let's get going. Hey, trading's risky, not appropriate for everyone. However, good or bad, your past performance is not indicative of future results, so you're always able to start fresh, the clean slate every single day. Therefore, stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne McDonell. Hello, hello, hello. How are you? How's your mum? I'm a currency trader, 10 years in my bag. I'm here to help. We do these sessions here at Forex.today, 7:30 in the morning, 2 hours before the Wall Street open. I work with TradersWay.com. It's an ECN that allows you to trade Forex, energies, metals, indices, and binary options. We did, I think we did, 3 binary options yesterday, and I nailed all 3 of them. Profit, profit, profit. One of them, though, it was funny. I was watching it, and it came down to the last second. In the last second, my trade ticked down through the zone by, like, I'm not joking, 1/10 of 1 pip, probably. I didn't actually look specifically, but it was less than a pip. I went through, and in the last second, it went doop, and then the binary option expired, boop. So I was profitable by maybe 1 or 2/10 of a pip. Boom! Got paid. That's the best thing about scalping with a binary. I was up 1/10 of 1 pip, but I got paid for 25 pips. Booyah! Love it. But that's the best part of it, right? Sorry, I'm eating a granola bar. I hope you don't mind. But yeah, that's the best part of it, and that's why I love binaries for scalping. Because if I was using the cash market, I would have been sitting on that trade, and nothing would have happened, and just well, I got out of the trade, I got paid, and MoveOn.com. Yeah, it's a double-edged sword, but, I have skill on my side, right? That's the theory. So, in theory, it could be a double-edged sword, like you're only down 1 or 2 pips and then it expires worthless. But why are you in that situation? Like, what dumb trade do you make that you sat there for half an hour and you're down 2 pips? What stupid trade was that? So hopefully, if you do it right, it's if anything, you're leaving some pips on the table because you only made 25 and it went 30 or 40. Well, whatever. That should be more of the case, right? So I think you tweak the odds in your favor by making smart trades. In that case, I forget when and why and how, but whatever. It was more of like we needed some eye candy. We were talking about blah, 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 but threw it down. We're at resistance. See what happens. Not a big deal, but, something, right? And I think a lot of my message yesterday was sell at resistance, buy at support. Even if they're mediocre trades, you'll probably do all right. And that's essentially what happened. I made 3 mediocre trades. Neither of them were particularly good. Neither of them actually in the stock market would have been particularly profitable. But, I made 75 pips worth of money. Well, that's not bad for a New York session when you made 3 mediocre trades. Could be worse. Could be a rabbit, could be. So anyways, the pig dog. I suggest we move on .com. If you want to trade it, just scalp it, dude. I mean, just throw down a 1 minute and go. That's what we do here, right? Right? Where's the resistance? Do you think it's the psychological level? Yeah, well, that's long and gone. Could have sold it at 55,000. You don't need me for that. So I'll just move on .com because my goal here isn't to get you into a trade. My goal is to teach you how to trade, and if you don't know how to trade that, you shouldn't be in it. And if you know how to trade it, you don't need me to tell you. Ask me when the market hasn't dropped 120 pips, right? You don't want to get in on a sloppy trade, do you? All right, so let's go into this. We were talking about cornering the market on the Kiwi, and I predicted an up, right? A big up, a big down, a bit of a sort of a consolidation retest, and then maybe perhaps a change in direction based on a move like that. Okay? That we would have a reasonable rally here and then a collapse once again, because that's clear resistance, right? Why wouldn't it fall? I mean, it would fall. I mean, you just have to assume a bear would have to sell there, right? How about yesterday, the euro dollar, I think it was, we were trading that and it dropped very, very significantly, very quickly. We watched it fall for a while. And then we hit like a psych level or a double bottom or something, I forget. I'm like, look, we know that someone at the top of that trade is going to take profit. Do you guys remember this point? It was like 2 hours or something into the webinar. I'm like, look, a whole bunch of people just made money on this trade. It was pretty obvious in the direction it went. Now we have a very, 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 very clear level of support. Like literally, you'd have to be blind not to see that. I said, even if you're a bear, it's going to bounce. Because some bears are going to take profit. Some bulls are going to go in. It's going to bounce. Even though there's nothing bullish going on, it's going to rise from here. And guess what it did? That printed the bottom of the day. Rose up another 30 pips from there. Just like, well, yeah, it's support. That's it. Like, why complicate things, I think I said, right? I don't know how many people still left. That was like, it was 2 or 2.5 hours. It was after the stock market opened. It might have been 3 hours into the webinar. I'm just like, yeah, well, that's support. It's going to bounce. Well, it's like this. Like, that's resistance. So, of course, it's going to fall down. It's going to hit that area and come down. Now, is it going to, fall 50%, 100%, or 161%? Well, Oh, I don't know about that, but I know that's resistance, and I know the bulls would take profit. I know bears would sell. So that's why you have it planned out like this, right? So here we are in the smaller section. You have to ask you have to ask the next question. On a daily chart, if we're heading up here, what's the price action on the 1 hour and 4 hour going to be to make this happen? Well, I think we were saying like a three-wave correction, and then down, and then then up, and then down, and then up. Well, in this case, we've printed sort of a micro move. Let me go to a 4 hour now. Let's try to hoof its way up here. Basically, I think what's happened is we can call this a consolidation up in here. Okay. Yeah, you can draw it what? About, oops, come on now. How about like, sort of like that? I guess we'll call, I want to widen that a little bit. I don't know. Okay, anyways, some sort of resistance. And I think what might happen is we have support, and now what we need to do is go, maybe not a Kiwi dollar, but maybe something else. I don't know if you're trading Kiwi Swiss franc, but maybe work your way up to here, eventually a higher high, higher low for a double bottom 1, 2, 3 reversal that would then carry us up to the target on the daily. What do you think? It's a hard knock life for us. Yeah. It's a hard knock life for us. Get my drawing tool here. Right. Rustum says, doesn't quite see it on the chart, which is a fair thing because there's going to be some, maybe, perhaps, fundamental bias in there. I think what's tweaking my brain, because you're right, there's nothing that says that there. It's more of maybe some anticipation or maybe hope. But I think sometime soon, let's say in the next 3 or 4 months, we will establish a bottom in the commodity drop and then start to rise again. And Kiwi still is the highest yield payer, and the world is interested in yield. And once we kind of stabilize this deleveraging that Europe is essentially now going through, once we get that stabilized, and they will through through quantitative easing, then commodity prices may be stabilized. I don't think they're going to rally to, but they'll stabilize and go up a bit to the new normal. And I think Kiwi will look attractive when global macroeconomics improve, just even slightly. And that yield differential will be really nice, like a Kiwi Swiss franc. Kiwi pays a lot. Swiss franc actually pays you to borrow it. Anyways, it's nice. It would be kind of the canary in the coal mine, the first survivalist. Like if something is going to turn around and go up, this one would probably be first. Maybe not Kiwi dollar, maybe Kiwi yen, maybe Kiwi Swiss franc, maybe Euro Kiwi or something, So it's just, is there anything that says this is going to go up? No. So let's keep an eye on it. let's be ready, is all I'm saying. So good call, Rustum. But that's honestly what's going through my mind. We got to watch something to know when it's risk off and turns to risk on again. Okay. So I look at this. This is an hourly. It's the trend is down, but less and less down, right? 4-hour chart. Is the trend down? It's a 4-hour chart. This goes back for an entire month. Right. Well, isn't sideways the new up? Well, I'm hoping so. Someday. Right? When you're all alone. So yeah, it's been down for a while. Maybe things change. I don't know. You're right that I look at this and the 2155 is clearly down. I get it. You're right. You're right. You're right. Well, if it stays above here, I want to be long. If it drops below that, I don't. So it's one of these things where my alpha, my ability to outbeat the market, is through thinking ahead. Okay? So it's sort of, you have hypotheses, and then you have to prove your hypotheses through a scientific methodology. So I'm ready to observe a potential change in direction. I'm ready to throw down a trade and perhaps hedge it through binaries. I know where the support is. I'm pretty close to the support, aren't I? So if I risk a little bit for unlimited upside potential plus interest payments. So what's the interest rate differential between the New Zealand dollar and the Japanese yen? Yeah, Warren says his signals still say down. Well, yeah, but I'm light years ahead of your signals. I don't know what it is, but I'm not thinking today or tomorrow necessarily. Now I might trade it today or tomorrow, willing to break even on it, but if it sticks, I got the bottom printed and I'm long, and I might be long for 5 years. What's the interest rate differential currently between the New Zealand dollar and the Japanese yen? Look, a Series 34 question. Anybody know? Okay. Now, compound, okay? So compound that, let's just say 3%. Just it's easy. Compound 3% over a year. Add your leverage, so on and so forth. It's good money. So 3% on, okay, let's say you're long $100,000 worth of New Zealand dollar. All right, 100,000 New Zealand dollars. Okay, you're long 100,000. How much did it cost you to invest into that? All right, you can do the cross rate calculations and stuff, but let's just dumb it down. Let's say it cost you you're leveraged. Where are you in the United States or no? We'll say you have a TradersWay account. You're leveraged what, 100 to 1. So generally speaking, I know it's not quite right, but let's say it's about $1,000. $1,000 allows you to buy $100,000, right? Okay. Your interest payment, is it on your $1,000? It's not. It's on the $100,000. So on your money now, you invest $1,000. You collect interest all year, and exactly 1 year to the date, you get stopped out at break even. You didn't even make 1 pip profit. Not even 1 pip. How much interest rate payments did you collect? Because you get paid every single day, right, by your broker? So every single day, TradersWay would put a little bit of money in your account every day. At the end of 1 year, you get busted out of break even. You didn't make PIP. How much in interest did you collect? Because you're collecting 3% on your $100,000. Okay, again, we'll dub it down. We'll say $3,000. What is your return on investment? $300%. Well, is that better than your mutual fund? Is that better than what you're going to for your house this year? Is your house going to go up 300%? Is your gold investment going to pay you 300%? What else do you got going on in your life that's going to pay you 300% a year? No, not 3% a day. No. But it's 3% on your leveraged money because you're actually holding the asset. Imagine it like this, because really this is what Forex is. You're actually holding a New Zealand, a sovereign bond, right, by the New Zealand government. And so you own that, and it says it's got a face value on it of 100,000 New Zealand dollars with a coupon payment of 3% annual. Except instead of getting paid twice a year, you're getting paid it 7 days a week. Now, let me ask you something. If I'm long the Kiwi yen for exactly 1 year, is it reasonable to think that I might not break even? I might actually turn a profit? I might actually make some pips? Is that reasonable? I held it for 365 days. Okay. Let's take a look at it from that point of view now. Because again, what if you're my client? What if I'm trying to convince you to give me money, man? Come on, Kenny. Give me $10 million. I'll tell you exactly what I'm going to do with it, Kenny. So, let's see. Let's have let's have 3 targets here. Boo, 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 boo. Boo, 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 boo. All right, so these are my 3 targets over the course of 1 year. It's up okay. It moves all right. And this other one, all the sort of macroeconomics come together. Quantitative easing in Europe saves China. China saves Australia and therefore New Zealand. And everything's booming. And everybody on the planet, every hedge fund, every commercial bank, everyone's piling into New Zealand to catch the positive interest rate differential. Hey man, I've seen it before, yo. I love how I'm talking all street. You. I guess it's me trying to dumb it down, right? So anyways, those are 3 targets. So let's say 80 to 84, 80 to 87, let's say. Oops. And 80 to 92. All right, so in 1 year, it only goes up level. How many pips did I make? Couple of hundred, right? How much money did I make? Cream's like 250. Okay, whatever. How much money did I make? $2,500? $100,000. We're all going off the 100,000. Standard lot. All right. Okay. Plus how much? 3,000. So it was a very disappointing year. I'm sorry, Kenny. You know, we only did 550% this year. It was very disappointing, but I think next year we can move to the next level, maybe beyond. Will you keep your money in my account? In fact, why don't you pay yourself 50% and keep the other in there? Would you do that for me? Cool, right on. Okay, so that was a very disappointing year. This time it goes up, what is that? Let's say 500 pips. So now you got $5,000. Because remember, you only invested $1,000 in cash. You know what I mean? All right, so this time it goes up 500 pips. We're dumbing it down. So 5,000 plus the 3,000 in interest payments. So now you only 800%. Sure, James. Yeah, just jam your stop and just collect it. Yeah, I'm just saying if it actually went up. I'm saying the worst case scenario, you made nothing pips, so you had a break-even trade, but still collected 300% return on investment. Okay, so you nailed it, man. You nailed it. This time you get 1,200 pips. $12,000 plus 3,000 in interest payments, $15,000 from a $1,000 investment. What is your return? Do you understand why I keep telling you not to shoot at rabbits? Maybe in July and August, in the middle of July and the beginning of August, it's okay to shoot at rabbits. But sometimes you got to get in the game like the big boys, right? I have probably 3 books in my brain that I've just never written since my first book a million years ago. And one of them is just, I want to call it like never take profit. How to get filthy stinking rich, because you have to put that in the title. How to get filthy stinking rich by never taking profit, by Wayne McDonell. The reason for that is you drop a lot, add a stop, let it run. Add another one, let it run. Because imagine all that way you're profitable, right? So if you're up 250 pips profit, how much available margin do you have? Yeah, Kiwi Swiss is probably another good one. Although I don't think Switzerland's going to have negative interest rates forever, right? So at some point they're going to raise interest rates. And, well, that I don't know too much about, right? So, shoot, I forgot the question I asked. What did I ask? I totally forgot. I'm thinking about it. I'm lost in the SNB all of a sudden. Where can we go? Oh, anywhere. Um, there's ton. Go to FX Street. I know they have a little widget somewhere that tells you the interest rates. Oh yeah, yeah, the margin. If you're up 250 pips profit, how much available margin do you have? 100%. Cool. Add another trade. Now that second trade goes up 250 pips profit. It might take a week or two, but whatever. So now you got one trade that's up 500 pips and the other one's up 250 pips. Add another trade. Add another trade. Add another trade. If one of them gets knocked out, it's going to be the earliest one. It doesn't matter. You're at break even anyways, right? Maybe at the end of the year, what if you had 8 open positions, all profitable, all Kiwi yen, and now you're collecting, you're still really, you're not risking anything anymore because all your stops are above break even. You have 100% available margin because we're mark to market and we're paid in real time. So you're trading your profits, but and you got profits locked in on every single one of the trades, but now you're collecting 3% on $800,000. Isn't that pretty? And how much cash out of your pocket is in that account? The one that initially covered the $1,000, right? The rest is profit because you keep trading, right? You keep trading because you're mark to market. See, put it this way: in a lot of markets, even until you cash out. So if you need to add, if you want to make another trade, you have to add more margin. Well, in Forex, you're marked to the market and you're paid your profit and loss in real time. You see it, right? Floating profit and loss. You see it second by second by second. Yep. And that profit is available to trade in real time. So if you're up $1,000 profit, right? That's available for you to trade. How awesome is that? You're trading the bank's money. Just make sure all your stops are at break even, right? Or better. Lock in profit on the first one, add a second one. Add in more profit on the first one, lock in some profit on the second one, add a third. Lock in more in the first, lock in more in the second, lock in some on the third, add a fourth. And this is the best time of the year to do it. So anyways, we're going all the way back to someone's question. Like they said, they don't see anything on the Kiwi that suggests that it's going to move up. I totally agree with you. I'm going to buy it anyways. I'm just going to do it in such a way that I'm not going to lose any money. I can break even on this all month. It won't bother me. Eventually, one of them is going to catch. When you're all alone. So that's that. So yesterday we talked about securitization. Today we're talking about position trading. What an interesting life we lead. All right, so a lot of you guys were super interested in this pound. All right, are you going to trade it? What's your plan, Stan? And you're all alone, and you see how freaking out wouldn't have helped? And the market, when the market did freak out, where did it decide to reverse? Oh, at the daily S2 pivot point, support 2, the most important support pivot we have, in my opinion. And did we even go 1 pip below? It went down to 5466.6 and stopped. Is that a random walk, or is that predictable? Now, if you can predict it, you can trade it. If you can trade it, you can profit from it. Okay. So, what are you guys going to do? Are you going to sell it? What's your thought? Everyone was eager to trade this. Well, it's so cold. Boop, 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 boop. So you're playing the psych level, Kenny, right? So Kenny's playing psych. Price action traders don't care. Price action traders, they don't care. Where are they going to sell? They're going to sell here, and they're going to sell here. Well, I don't think anybody's selling a support pivot no matter what. So Manuel says, with confirmation, price action traders don't really have confirmation. The confirmation is that's resistance. Okay. So how does a trader trade that? They do it like this. And they do it like this. Okay? That's the confirmation. It's confirmed when price hits your limit order. See, scalpers, for example, and if you're trading very short-term price action, you're essentially a scalper. You can flow both ways, right? When you're a scalper, you don't have enough time or pips, really, for the confirmation because it's just too slow. By the time you get the confirmation, let's say like a 5A cross, you've already lost about 25 or 30% of the move. So like, let's say you're trading a 5-minute chart. We're on, like looking at a 5-8 chart now. How many candles is going to be required to that 5-8 cross down? 4? 5? I think it'll be more than 3. Because, you know, how many candles will it require to roll this oscillator over? Well, this is 835, right? So it's going to take a few candles because, unless they're all red, 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 but by then it's already too late too, right? So if it's going to kind of consolidate and then roll, you know, it's all just very much too slow for a true price action on a small time frame, right? Or a scalper, right? Now, let's say you're doing the same thing, but you're trading it on hourly chart. You can do the same type of stuff, but what you would want to do is do what I did, is identify your swing levels. These are places that sell here and here. I don't see any other place. Okay, and then you've made your decision. So some traders would just throw down the limit order. They're done, right? And then you know my charts. If that's triggered, then my OCO gets triggered, and it throws down a stop and a limit, and it's all predefined, and it's all really nice, and I know my risk reward and all that kind of stuff. And if I'm in really good. And if I'm not in, it never hit anyways. So you know, but then the next thing you would do is say, okay, I'm in the gray zone, right? I'm in the gray zone when I'm touching this 5533 area. Say I'm in the gray zone, and that's where you drop into a small one. And very often, it's even a 5-minute chart. Or a 1-minute chart, I mean. 5 is better, but like I said, on the 5-minute chart, it could take somewhere between 15 and 30 minutes confirmation. Okay? Manuel says, what about stops? Well, like I said, I already got that predefined. So I run EAs to manage that for me, especially when I'm throwing down limit orders. Okay? So if I go here, I can tell you. Let's go to my EA. Let's go to the properties. Okay? I have a 33 pip stop, a 99 pip limit. So if either of these or even both of these limit orders are hit, it throws down to 33.99 OCO. Now that gives me plenty of time to manage it manually if I want, but I know my risk reward ratio is 3 to 1. I know I'm risking $333 per trade. I got it. It's all good. Right? All predefined. Oh, Chris is saying before data. Yeah, yes and no. If it's before serious news, go to the next level there. Because most news, okay, most news doesn't change a thing. It just blows out the closest stops, whether it's bull or bear, whatever. Just a lot of people get in, a lot of people get out, very reactionary, lots of stop losses get hit, so there's some pops and stops. But usually what it does is it just flies up next level, and then people just continue mission. Have you ever noticed that? That the market freaks out for a while, and then we go right back to what we were doing before. 3 days later, you're just like, what was that all about? Okay? So it's just like, look, what do I always say every single day to you? Look at your long-term chart or the fundamentals and make a decision. Are you a bull or a bear? Nothing on this should determine that. Right? I've said many times, when you boot your computer in the morning, you should already know what you want to do on this currency pair. When you wake up in the morning, you're like, oh, I hope we're at resistance on that pound dollar because I want to sell this hard. So if there's big news coming out, well, just trade this zone or this zone and just say, man, if I can catch this at 56, I'm going to dump it. right? You should already know that, guys. Already. You should be planning that now. If for whatever reason, price comes way up here, 6, the daily pivot, the weekly central pivot, psychological level, man, I'm going to be hardcore short. Because that's what I want. That's what me likey. But you shouldn't be like trying to figure that out now. Okay? You get it? Because you just, I don't know, you're not doing it right. Okay? So a professional manager would not be staring at his charts now trying to figure out what he wants to do or what she wants to do. We know that. We discuss it all the time. So what you should be doing when you open your charts is, if you're a bear on the pound dollar, is a very simple process. Today, what are the 3 best places to sell pound dollar? That's the only question that should be going through your brain today. If that's what you are, a bear. You should have been a bear yesterday, you should have been a bear last week, you should have been a bear last month, if you're a bear today. Nothing really changed fundamentally as far as I'm concerned. I think a lot of people were betting the BOE was going to raise sooner than later. Oh well, they lost that bet. So, as a professional now, if you're a bear, all you're doing today is identifying 3 levels that you would like to sell. Now, they might not be hit today, but that's fine. That's not your concern. Your concern is, if it goes up, where do I sell? Because your concern isn't that if it's falling, where do I sell? Well, it's already too late. You know what I'm talking about? Okay. Okay. Do you notice I'm in? Was that difficult? Look, sold 100,000 pounds, $100,000 worth of pound. There's the price. I stop. There's my take profit. There's my floating profit and loss. Okay. I had to invest $1,552 for the position. Stop's already in there. Lordy-dody-doo, lordy-dody-doo. You guys better be right. You told me to sell it. Well, Manuel says it sounds very simple, but it really is not. Well, that's the struggle, and I'm trying to help you through that struggle. If it's not, like yesterday, one of the things we talked about, if it doesn't feel comfortable, if you don't feel relaxed, if trading isn't as soft and gentle as holding a baby bird in your hands, then there's something going on in your trading that needs to be fixed. Right? And that there's warning, there's like red flags or something, right? And that's where the extra stress is coming from. And that need to be addressed somewhere. So the idea, Emmanuel, is it's not that easy, but it should be that easy. So what do we need to do to make it easier is really the question. And adding levels of complexity and like, my trading is crap, so I think I'll learn Elliott Wave on top of that. And oh, it's still crap, so I'll learn, how to use the ADX, and oh, it's still crap. Well, I guess I'll pay money to learn how to use the CCI index, and I'll take the big CCI, or I'll learn pitchforks. I'm going to throw myself at pitchforks for that. Well, no, look. Your trading's crap because you're buying at support and selling at resistance. So, so stop doing that. You can add all the other stuff on later when you're successful, but not because you don't add those layers of complexity on because you're not successful. You only add those layers of complexity on when you are successful so that you can sort of, refine the rough edges and squeeze out an extra 5 pips on your 50 pip trade. Or make one less trade per day because one of your trades is a loser, so you're looking at ways to cut out some of your losers, not add to your winner. Whatever, because then your profitability goes up. All that kind of stuff. In the beginning, I want you to focus on holding the baby bird in your hands. Trading shouldn't be stressful, it should be peaceful. So we'll do things like make a decision whether you're a bull or a bear. Make the decision today and don't trade till next week. Wait till Wednesday of next week to make another trade. But look at your charts today, really make a decision on what you're going to do on Wednesday. What? Well, you should. I know what I'm going to do next Wednesday. Do you understand that? People are like, Wayne, you have a crystal ball. You can predict the future so well. Well, I already know the future. I know what I'm going to do on Wednesday. It's Thursday today. Tomorrow we got NFP. What's the number going to be tomorrow on NFP? I don't know. What's the market going to be like next Wednesday? I don't know. I know what I'm going to do. I know what my behavior is going to be. So it's quite predictable what I'm going to do. What's the market going to do? Oh, well, how would I know? What's the news going to be? Why? How would I know that? But I know what my behavior is going to be. I know if I'm going to not. So the way you simplify it is you make those decisions ahead of time. So now you're like, I'm only going to sell euro dollar. Cool. So then the next one is on Wednesday now. What are the 3 places I would like to sell the euro? Well, level A would be good. Level B would be better. Level C, well, we'll see. We'll see how if it gets to C, right? And there you're like, there, I'm done. I did my analysis for today. No, I'm just making up Wednesday. I'm just saying, make a decision for the future. Don't look at your charts and figure out what you want to do now. Well, it already happened, right? So a lot of people are like, get short pound dollar. Well, if you were a bear, you should have been short yesterday. That's the point. Why do you want to short it now? It just dropped 120 pips. Well, because it dropped 120 pips. What? Because it dropped 120 pips? No, no, that's not how you do it properly. So, again, let's talk about what a professional would do. They would hire PhDs, people that have master's degree in finance and economics, and they would look at the same data that the Bank of England is looking at. And they would know every personality on that MPC board. And they'd scrutinize all known information. And they would say, there's no way in hell the Bank of England's going to raise interest rates. We need to be short. You can't raise money from an investor by saying, you know what, the pound dollar's dropped by 120 pips, so now we're going to sell it. We had no idea before. We were actually quite surprised, but now we want to do it. Well, it's kind of already happened, right? But whatever. So just always think of it from that point of view. You should be able to explain to a complete stranger what your strategy is and why. If you can't, then you don't even have a strategy and you don't know why you're making your trades. Well, that must feel uncomfortable. Right, Emmanuel? Right? That's where it gets like, this is I feel uncomfortable in my trading. Well, yeah, because you're not quite sure what's going on and why you're doing it. And obviously it feels uncomfortable and it's stressful and probably not be consistent. And you're smart enough to know there's red flags. You're like, oh, this doesn't feel good. I'm really stressed out. Now, if I was a hardcore bear on this, wouldn't I be pretty excited? Have you ever heard me say things like, yes, more green candles, awesome, I'm going to sell this. I just can't wait, man, look at those green candles, I'm going to kill it. Come on, Bubba, get up to resistance so I can sell you. Well, when I do that, it's pretty clear that I'm not chasing price, right? Quite the opposite. I love to think of it like, what moron, what idiot, what nincompoop is buying that worthless, crappy currency? All right, well, drive the market up, boys, because I'm going to crash this thing, right? Because I want them to do that. I want the market to be mispriced so I could correct it for them. So anyways, you want to do it? Oh, you know what I should probably do? I'm going to cancel my other. Just nah, I'll leave it. All right. It's only money, right? Which one do you want to do now? Yen yen. When you boo 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 ba 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 ba. 25 stopped. Pretty neat, huh? Who was trading with me when we were at 100.5? And how certain was I that this was going up, even though it consolidated for 6 months straight? Right in here, 100.5, then it kind of went up and down and up and down and up and down. Yeah. Yeah, back then at 100, right? But what, in my message every day, day after day, even though it didn't do anything for 6 months, it moved sideways, guys, for 6 months. And never once did I say short. And I think I made it clear, like 1,000% clear, this was going up. And right in here, I think I was long like 20 different trades on various yen pairs, maybe more. It was just phenomenal, ridiculous. Up, 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 down, 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 up, 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 down, 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 down. Here we are at the end of last year. And this is where we were talking, see back here we were talking 115. Here we were 25. Can anybody confirm that? I mean, that's 2 years worth of trading basically, right? Because we started in the early period of 2014. So basically the end of 2013, right? For the retracement, it was supposed to, and then move sideways for 6 months. Cool, huh? Now, I'll give another example here, because this is about where we are now. Okay, this period here is where we are now, August. Okay, August of 2014. Okay? I told everybody day after day after day after day after day after day. These are all days, days and days, for weeks and weeks and months. But specifically this period of August, I told people to not even try to make any pips. The only goal for that period was to get long, move your stop to break even, get long in another trade, move your stop to break even, get long another trade, move your stop to break even on any yen pair, it didn't matter. And I actually told people, assume you're not going to make any money. Literally, don't even try, don't shoot at any rabbits. We are going to build positions. And if it doesn't out, you're going to get knocked out of everything and nothing will happen. You'll have no profit for the month of August. But it's not going to be a good month anyways. Don't worry about it. It's August. Look at the volatility we had. The lowest volatility in the history of Forex. So I'm like, don't even worry about it. Don't even think about it. Don't even take profit. Get a trade in. Move your stop to break even. Find another trade, ideally on a different yen pair. Get that trade in, move your stop to break even. Don't touch it. I don't care if it goes up 300 pips. Don't touch it. Leave your stop at break even. How many people are here from that period? And I said, your goal, if things work out, you'll be in 6 or 7 or 8 trades. All the stops will be at break even. And this thing's going to take off like a rocket ship. Anybody? I thought there'd be more. I thought we'd probably have at least 5 to 10 guys. No? Well, see, the problem back then is they used to charge $300 a month advice, so. Now you're here. But we're kind of in the same situation here, but completely different macroeconomics. But it's just very interesting that we finally are at that key level. But can you imagine if you had, let's say, almost 10 open positions, all stops are at break even, and it did that? That was my entire message for the entire month. I said specifically the third week of August that it would start to take off as well. There are people that can confirm that. But the logic is, or the reason I said now, it's not bragging rights, it's that we're kind of in that period now where we're in the dead of summer, but that's about to change. And that our strategy should change. So I said the beginning of July to the middle of July to the middle of August, you should shoot at rabbits. If you can pick up 25 pips here, 50 pips there, you're fine. Be happy with that. Don't worry about it. You got to eat rabbits too because you got to eat. But in about 2 weeks, 10 to 14 days from now, we should consider changing that strategy again. Now, what would change, guys? What's the big deal in the next 2 weeks? Yeah, you got it. The big boys are coming back from holidays. Yep. That's it. How stupid is that? But it's true. Now, we've actually been blessed with a fantastic trading summer. It's been good, very, very good, relative to other summers. Been very blessed. Fantastic. But do you understand, though, that, when you look at a chart like this, let me go back to the daily chart. When you're looking at a chart like this, it's kind of silly, isn't it, for you to be thinking about, you're trying to figure out now what you want to do in the next 20 minutes or the next hour. Like, well, what do I want to do? Do I want to sell this? What does my oscillator tell me? You're missing some key information, right? Right? Do you understand, like, this period from here to here? If you're on multiple positions, that's worth like 15,000 pips for the month. Not all in one trade, but if you had 6 or 7 trades on, like you were supposed to, yeah, that September to November period was worth 15,000 pips if you did it right, if you took my advice in August. And you had just reasonable position created with multiple trades. Everything's at break even. You're risking nothing. 100% available margin. The market takes off, goes up for 3 months. You get out right before Thanksgiving. That was easily 15,000 pips. But that's very difficult to do if you're scalping 12 pips here, 22 pips there, 30 pip loss, 18 pips profit. Ooh, a big one. 33 pips, right? Woo, I feel so good. It doesn't add up on the long run, does it? Have you ever tried to do that? You just add up. Like, what is a reasonable winning percentage for you? When you're good, even in your mind, what, 70% of the time you're going to be right? What, and then what percentage are break even? What percentage are losers? What percentage of the winners are just going to pay for the losers? And what's left over? Not enough. That's what I'm trying to tell you guys. Not enough. If you just plotted it. So we talked the other day where I had a business planning retreat with myself back when when I truly became, probably that weekend, I became a professional that weekend, where I did things like form a cash flow statements over the, 3 years in advance for my trading business. And I discovered a lot of things, and one of the things I discovered out of all the many things is that, you can't just pick up 22 pips here, 14 pips there. Every once in a while you get a big winner, it's 50 pips. Woohoo! Over the long run, you won't make it. Now, I think spot trading and scalping and all these different things are fantastic. They're definitely part of your success. But also you have to put yourself in situations like collecting interest, being in positions, building positions. You should have one account. Let's say you go to TradersWay and you open up an account, you put a few $1,000 into it, and that's your scalping account. You want to use binaries. You want binaries to scalp. Scalp with your binaries. You need to take a few $1,000s more, open up a second account. And they're linked together, right? But you open up a second account and you say, this one is for my carry trades. And your goal with that account is to trade positive interest rate differential pairs, things that you believe in on the long run. You're going to enter the trades, and then you're going to move the stop to break even. And you might not, and once it's at break even, you might not even log into that account for a couple of weeks. And once it's good and set, and you're up 300-400 pips, then you'll say, you know what? I think I'll consider adding to that position. As soon as I get a retracement, I'll buy another position at support. I'll nurse that to break even, and now I'll have two positions in the direction of my long-term technical buys and the long-term fundamental buys, positive interest rate differential, stops are at break even, and then you'll log out of the account, and maybe you'll check in on in a few weeks, maybe a month. You log in, one's up 500 pips, the other one's up 300 pips. You're like, well, maybe once it pulls back, I'll look for another opportunity to buy, and I'll tiptoe into a third trade. And that's just part of your trading career. You do some scalping with binaries, you do some spot trading, right? Maybe you swing for the week, like if you sell on a Tuesday, maybe you cash out on a Thursday or a Friday, and you're like, I'm going to be in this for a couple of days. And then you have an account that's just for carry trades, and so you're just in those, those trades, and it's that strategy, and you know what you're doing, and you're managing it, and you're not staring at it, but you're not doing that at these, by taking on more risk. What you're doing is you're removing the risk and then letting it do what it's going to do. And even if it's wrong, let's say it goes up 150, comes back down, knocks you out of break even. Well, it's opportunity cost, but you did collect interest on it. You know what I mean? You had the opportunity, and you had no risk. You removed the risk. So nothing to cry about, especially if you got two other trades that are still open, still paying you interest. Then, of course, you have to remind yourself, well, if you could stay in for a year and not make any pips, you're still going to pick up 300%. That's not bad. But if it hits, oy vey. Okay? So I want you to put yourself into positions that you're going to succeed. The market conditions we have now, I anticipate changing in the next 14 days. I'm ready. Will it happen in 14 days? I don't know. Is it 21 days? Is it 34 days? Maybe it doesn't change at all. This has been a great trading summer. Maybe this just continues. But has the fundamentals changed? No. When will the Bank of England become more bullish? Well, I already talked about that right at the beginning. Isn't it amazing? They don't have inflation now. That's why they can't vote to raise interest rates. When will they have inflation? When they drop that negative number from 3 quarters ago. Well, when is that going to be released? Shouldn't you be doing that research? In January, the new number is going to come out, and there'll be a huge spike in inflation in the UK. Well, what a crystal ball that is. How do I know that? Well, maybe I'm asking the right questions. Well, how do you compute GDP? Year over year, GDP numbers. Well, you look at the last 4 quarters. Well, what was the inflation levels 4 quarters ago in the UK? It was a bad number. When does that drop off and get replaced by newer information? January. Oh, maybe that's what Carney and the MPC are waiting for. Maybe, maybe it's good that you're here and we're talking this out as a team than watching TV and waiting for CNBC to bring in some expert to tell you his opinion when they don't know anything because they don't even do the basic research, right? Wouldn't that be it? When does the GDP number get released with the good 4 quarters in a row, not one bad quarter and 3 decent quarters? When does that GDP number, when does the bad one get dropped and get replaced by a good one? And will that have a positive effect with inflation rate? Well, let's say the way that everything's calculated now for the UK number is negative 1%, 1%, 1%, 1%. There's 4 quarters. What's the number? What's the average year over year? Negative 1, 1, 1, 1. Help me do the math. Okay? So now, let's say the new quarter comes out and that gets released and we have to calculate the year over year change. And now instead of negative 1, 1, 1, 1, what if it's just 1, 1, 1, 1? Or even better, right? 1, 1, 1, 2. The new number should be a lot better, right? The new number that gets added should be a lot better than that bad number that's going to be dropped. You see what I mean? Because we know that the first number in the current calculations is a very, very bad number. The newer number should be much better than average. So you go from a big negative number to a big positive number. The difference between the two is even greater because the difference between a negative 1 and a plus 2 is 3. So what's the change year over year? What is the velocity or the rate of change? Well, now because one of them is the difference is from a negative 1 to a plus 2 is 3. Oh, now the economists will have lots of things to talk about. Oh, the velocity of money and inflation, and oh my God, inflation's crazy. We got to do something. It's spiking. It's spiking. It's not spiking. We just had a bad first quarter last year because of bad weather. It's not spiking. But this is what people do. Oh my God. It's crazy. We got to raise interest rates. All right. Go ahead. Raise interest rates. You got permission now. Is that ready? Isn't this fun, guys? No need to freak out, right? We're already ahead of everybody. Do you understand? We're planning things out for January and June 2016. We're planning things out 3 weeks from now. We're planning things out for what you're going to do on Wednesday. When you're thinking ahead, you're not, falling behind, right? So doesn't that sort of ease the stress of trading when you've already put in the thought? You already know what you're going to do on Wednesday. You already know what you're going to do 14 days from now. We're going to look for a change in volume and volatility. We know when the Fed's going to raise interest rates. We know when the Bank of England's going to raise interest rates. We know how long the European Central Bank is going to do quantitative easing. We know Japan's. We talked about it. Probably let's go back to this USD yen, and then I got to wrap this up again. I'm going way over time. I love you, man. I just want to let's point this out. When did this take off? I don't know if you remember, but I put you long essentially. I don't like saying that, but made it very, 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 very clear the yens are going to weaken, and that these yen pairs are going to go up, because sort of in here, this new rally. Remember how the yen was it was in a strong period, and then what happened? The finance minister of Japan and the governor of the Bank of Japan both admitted that they're not going to hit their targets, that they're failing. You guys remember that? It was very clear. They actually told us, right? They actually told us we are not going to achieve our goals this year. So there are two choices: complete failure, or they need to add more quantitative easing. We talked about it. I mean, plain as day. Just like we're talking about things now. I know exactly when inflation data is going to improve in the UK. I know exactly when. We've already talked about it. Now, many people are going to forget, but it's there. It's as plain as day. It's easily explained, too. Very, very easily explained. So, it's going to be in a month or two. Right? Well, here's that situation. The yen couldn't stay strong because it was killing their inflation target. So what's the Bank of Japan going to do? Weaken the yen. Well, the yen is now up 500 pips. Well, it took a month. But like I kept saying, it's a beautiful summer. You're like, well, Wayne, by the time that information came out, it was just too fast. It was just gone. It was gone in a week and a half. It made a high, right? It's too fast. But do you see, we still have this fib study. Do you see it? It came down, made a 382 Fibonacci retracement, and then made the higher high. Whale oil B. Interesting. So I'm just saying, it's all there. If you stop and think about it for a while, it's all there logically, or a way of saying it is, fundamentals, and it's there technically. I mean, look, you can buy that pullback, you can buy that pullback, you can buy that pullback, you can buy the macro pullback. There's just, that's there if you want it. So I hope it helps, because I love you, man. I'll see you tomorrow at FX Street. I apologize again. There's another, I think every single day this week was minimum an hour and a half webinar So I apologize for taking so much of your time, but I do thank you for your loyalty, sticking around, participating. I'll be at FX Street tomorrow for 3 hours. Be nice to see you there. It's non-farm payrolls live number 111. I've traded non-farm payrolls live in front of other Forex traders for 111 months in a row. 111. It's redonkulous, isn't it? What am I, 1,000 years old? How old is that guy, man? Has he been doing this since he was 12? Right, Marcia. I love what I do, and I love doing that with you guys. You honestly, you keep me sharp, you keep me focused. There are plenty of days when I feel sick, but I can't stay in bed. I have to get up and be ready for you. There are plenty of times when I'd rather just go golfing, but I can't. I can't let you down. There are plenty of times where I'm just, I'm tired. I was up all night. I think I'll just, skip New York, go to sleep. But I can't, because I can't let you. And you make me want to be a better trader. So peace on earth, may the pips be with you, may your profits average. Thank you for TradersWay for sponsoring. Thank you to Forex.today for hosting. Thank you for your participation. I'll see you tomorrow. Cheers.